Right, hello and welcome to Camel Finance. I'm your boy Camel, and today is very, very, very important, okay? First of all, I want to quickly say thank you because we passed 4K subscribers, and as we always do, right, as we always do, we must pay homage to the people that have been the biggest supporters, the people that were here the first and the earliest. So an extra special thank you to the channel OGs. You know who you are. And of course, the triple OGs that were here before 500 subscribers. For everyone else, welcome to Team Camel. Welcome to the Camel Crew. And I'm sure this year is going to be fantastic. So a massive thank you to the 4K crew. And the gap from 3K to 4K took just over 30 days. So absolutely fantastic. We love to see it. Today, I briefly just want to touch a little bit on Bitcoin. I've got like 3 slides to show you. And then we're going to get into what is frankly the most important data that we are going to see for a very long time, okay? We need to talk about inflation. I know people don't like to talk about this. I know I've mentioned this before. When I start to talk about inflation, it has the highest rate of people leaving and clicking off the video. But believe me, if you don't pay attention here, okay, you're missing the biggest piece of alpha that this channel brings, okay? There's no point watching any of my content if you're not going to pay attention to this bit right here, okay? This bit right here is how I've managed to stay on the right side of the market for the entire time I've had the channel. So please, please, please pay attention. I'm going to keep it as basic and as quick as possible. And then we're going to go into some charts, do a deep dive TA. The dollar needs to be discussed in detail today. So I'm going to be discussing that because, well, you'll see when we get there. And of course, we'll show you the rest of the charts ready for the week ahead. So this is a huge, huge week because Bitcoin likely gets its ETF decision, right? Whether it's approved, it seems to be what Bloomberg are calling for, or rejected and kicked down the road. I would rather that, okay? I would rather see some basing. I would rather see some time to cool off and to go sideways, giving us an opportunity to load back up and look to play a standard 4-year cycle. I would rather that. But if this thing gets approved, then I think we see fireworks. I think we have to entertain that left translated cycle top coming in, and it's going to be a lot more difficult to deal with. And not only that, on the same day, the 11th, that we're supposed to see this approval for the spot Bitcoin ETF, we also have CPI, okay? And I'm going to show you exactly why this is so important. So without further ado, thank you once more for being here. Let's get into this. We saw that VanEck is come out and said that it's going to donate 5% of all of its Bitcoin ETF profits to the Bitcoin Core devs. And a lot of people are saying things like big and awesome, that's dedication. I just have to quickly voice my opinion here. I do not think this is good. I don't think this is nice, okay? I don't think having institutions have exposure to Bitcoin, right, holding other people's Bitcoin, I don't think them having a large stack and then paying the dev team is a positive. This to me smells just like when we see banks and institutions funding members of Congress or political parties or whatever, and then they end up lobbying and changing the laws to make them suit their financial goals or benefits or needs or whatever. I'm not saying this would happen with Bitcoin, but typically when I see people that hold a large stack of Bitcoin and then are also donating to the core team, that just, my paranoia, right, my spidey sense just goes through the roof at this moment in time. So I know a lot of people think this is cool, and maybe it is, okay? Maybe I'm overly paranoid, but it's not paranoia if they really are out to get you. And I personally don't think this is something we should be championing, but of course I could easily be flat wrong about that. The next thing is, the odds of Bitcoin being a sell the news event, assuming we get it approved, seem much lower now that we've had that big flush out of leverage on Monday this week. There is still quite high CME open interest, but take a look, right? Bob Lucas here saying, look, he has to agree, think it allows a little bit more time for a multi-week run before. So whilst the crowd seems to think the approval is a sell the news event, the pros, the people that have been here for a very long time, the people with a lot of experience in the markets, including myself, seem to think this is more likely to be a buy the approval, sell the launch type of event. So that is to be determined. As I said, if we're going to continue to entertain this left translated cycle top, then it's going to be really difficult to deal with. I would much rather see a sell-off and a base and a standard 4-year cycle. That will be far easier to deal with. Anyway, as always, one day at a time. So next week is going to be big because we're going to get that ETF approval or indeed rejection. And one thing I know for sure is that the Bitcoin price is not going to stay still during this, okay? So we need to be on our toes for that. We need to be ready for that. But even more importantly is US CPI comes out on the 11th of January. Keeping this as simple as possible, why is this so important? Everyone knows recently we had a high inflationary environment. We know they printed money. We know that eventually that money works its way into the system with a 12 to 18 month lag. We know that causes inflation, or at least is a contributing factor to inflation. Of course, you need velocity, but we're going to keep this simple, right? We know everyone has experienced high inflation, and we have since been in this disinflationary period, meaning that the CPI number has been decreasing, right? Nothing new here. You all know this already. But we're no longer here, right? I believe this is where we are. And why is that important? Because people don't understand that deflation is likely coming. Now, deflation is different from disinflation. Disinflation just means the CPI goes from 7 to 6 to 5 to 4 to 3, right? Deaccelerating CPI coming down. Deflation is characterized by negative numbers, negative CPI. So to be really clear here, I think we could see -2 or -3% CPI. That is what deflation is, and this is not good for markets, believe me. Now, I know this isn't a popular opinion, but let me show you exactly why this is my base case and remains the base case. It has been the base case for a while, as I'm sure you're aware. The first thing I want to point out, okay, is currently Trueflation has us on a 2 handle. As of last month's readout, we had 3.1%. Okay, that sets us up nicely to see a 2 at the front of this CPI print this week coming. Now, why is that so important? If I draw your attention to this, okay, this is the CPI readout for Trueflation. I want to just point out this one thing, okay, which is declining phase, sideways base, potential resumption of the downtrend at the hard right edge. Look at this, okay? Now let me show you just why this is so important. Again, I'm going to keep this really, really simple. Here is M2 rate of change, okay? The rate of change of the money supply. This is basically the printer. Here, we had this leg down and a sideways wobble. And that corresponds with a 18 to 19 month lag of the CPI print coming down and then sideways. So going back to this Trueflation chart, which is right here, you can see down, sideways, now looking to resume lower. Again, why is that so important? Because the rate of change of the printer go burr. We've come down, sideways, and then continued. But this portion of the curve is not yet priced into the CPI because it lags by 18 months. So, one last time, the printer went down, sideways, and down, and it lags by 18 months. Meaning the CPI has gone down, sideways, and what should be coming next is the final leg down. This tells me that we are going to indeed see deflation. We are going to get to the negative CPI readouts. Deflation is synonymous with massive market meltdowns. So this is why I implore you not to click off during these portions. This is why this is the single biggest piece of alpha out there, because we are seeing that in the inflation data. This is going to probably be confirmed in this week's CPI print. Down, sideways, ready for that leg down into the negative territory, just like we saw here, sideways, ready for that leg down. Here, sideways with a lag, getting ready for that leg down. Not many people understand. A lot of people think that what comes next is maybe this and then some sideways and then printer go burr and all asset prices to the moon, okay? That's what people think is coming. But this portion of the curve at the rate of M2 change, okay, the money printer supply, that is telling us that we have not yet even begun to feel the effects in the CPI. So we should indeed get a 2 handle. We should get a 2 at the front of whatever the CPI data is this month. Now, there's always a chance, okay, we have to be open and honest here. There's always a chance that we haven't quite finished the sideways period and perhaps everything I've said is a month delayed. So maybe we get another 3% or a 2.9 or a 3.0 at this week's CPI print. Maybe that's what happens. And then everything I said just gets moved back a month. Okay, but it doesn't change the fact, like I said, that we've come down, sideways and down, and it's yet to manifest because we haven't had that final third leg down. So whether this comes this week or whether it comes in a month's time, this is coming. And that is why it is so important, because if we see a 2 handle, particularly if we see a lower 2 number, 2.7, 2.6, 2.5, something in that neighborhood where we've got quite a significant drop from 3.1 down to whatever the 2 handle is, if we can see that, we will see the market go into blow off top mode. This is what we will see. This is the entire thesis for this. And the reason I've been able to stay on the right side of the trade is because of this knowledge of inflation and the business cycle. The bond market and the CME for the Fed funds rate seems to know this. We are bouncing between 75 and 66% probability that we are going to see cuts in March. Again, going back to this melt-up chart, do they cut here? I have shown this a bunch of times too, where we have the Fed funds rate in orange, right? And the US 2-year yield, the 2-year bond yield in green. What happens in every one of these cases denoted by the blue vertical line is when the Fed funds rate crosses above the 2-year yield, the Fed moves to a pause, which you can see is this plateau in the orange, and then they start the cutting cycle, and the green, right, the 2-year bond yield, sees this ahead of time and sells off, right? Sells off during the pause, sells off during the pause, sells off during the pause. Every single time it's already started selling off. This means the bond yields, right? Bonds know that what's coming next is this continued plateau followed by the cutting cycle. Okay, nothing is different this time around. That means if cuts are coming and they're currently priced in March, as I've been saying here, right? And again, if we get that lower CPI print, then this is going to reprice even more strongly. This is going to become an 80 and 85% probability that we see those cuts in March. And the key point here is that if we now overlay the S&P 500, what you can see is in every case, when we move to the pause in the orange, right, when the Fed funds pauses, we get a big rally out of the stock market. We get big rally, right? We get a big rally. We get a big rally. But then what happens is as we move to the cutting portion, right, as they start to cut rates, the market, the S&P 500 has already topped and begin selling off. So again, it tells us that going back to this melt-up chart, what the CPI is going to reveal to us this week is if indeed it's on a 2-handle, then we're going to see those cuts be priced in for March. That means that we've got somewhere between 2 and 4 or 5 months of rally left in this stock market before the cutting cycle starts to take effect, before the market starts to top, and before we start to go towards that deflationary bust. Of course, walking out 3, 4, 5 months into the future, going back to that inflation, deflation pendulum, we are going to be inside this strong deflation window, just like China is already, by the way. And like I said, we have yet to see the rest of this portion of the CPI manifest. All of this right here for the money supply is currently missing in the CPI readouts. So I hope that's clear. This week's CPI is super important, right? If it's hot, if it comes in at anything above 3.1, then what we're likely to see is a big sell-off in the near term. You're likely to get this narrative of the Fed's probably got more hikes left and blah, blah, blah. But all that means is it gets shunted out by 1 month until we start to see this portion of the curve manifest in the CPI readout. I have a sneaky suspicion, though, that we are going to see a 2-handle. If we see that 2-handle, it also means that this has indeed marked the beginning of the next leg down towards negative CPI prints, towards deflation. That means the end is nigh, but it also means that in the short term, markets are going to go into berserk mode. We're going to see huge rotation into risk assets. We're going to see this blow off top moment, and you better believe Bitcoin and crypto are going to go berserk as well. During this time, I would likely expect to see the credit spreads start to do something like this and think about breaking out. Of course, when they do break out, we'll know it'll be coupled with strong deflation. It'll be coupled with technical breakdowns in the charts and tops in the stock market. And we will get something like this, which is synonymous with financially stressed conditions. And as if all of that is not complicated enough, right? We've now got a spanner being thrown into the works. And that spanner has come in the form of the dollar basket, the DXY. So we need to spend some extra time on the dollar because this is going to be important. This is where we are right now, okay? Week 23. This has been the base case expectation, and if you've been on this channel before, then you will have seen me calling for a mid-90s DXY and a 3-year cycle low somewhere in this neighborhood where I've got this blue squiggle marked, right? I said it could come as early as here in the beginning of January, but I would largely suspect it comes at around the end of March or the beginning of April because that lines up with that cutting cycle quite nicely. But remember, cycles aren't day and week perfect. They have wiggle room in them, and the dollar is no different. So I was talking about this, right? Have we maybe got to entertain that this is the 3-year cycle low? Is this breakout for real? And are we about to see something like this? Now, I don't know is the clear, open and honest answer. But the reality is, if this breakout does not roll over and fail, right, then it's a breakout, it's a change in structure. It's also a, what's this, 1, 2, 3, 4 quadruple bottom at this level of support, followed by a breakout and a change in structure, right? You have to respect that. What am I supposed to do? Wait for the price to do this and say, no, it's still going to go down. It's not. If this is what plays out, then we will see a higher dollar, okay? Now, that is not my base case. Let me be clear. This is my base case, that this is where we are. We get a counter trend rally, right, into resistance, and then we roll over something like this into that final 3-year cycle low, which makes a lot more sense. It lines up nicely with this, right? That gives us the space to run for a few months. They cut in March. The dollar finds its cycle low somewhere between the end of March and April, and then, that makes sense. Dollar bid, right, as it says here, Dixie to 134 to 140 plus, as everything comes crumbling down in a deflationary bust. So this is still my base case, which means going into my own dollar chart, that actually it will look something much more like this. And what we will get to see is the CPI come in at a 2, this largely gets slapped down, one more weekly cycle into here, and then of course we make the run to 134 plus, okay? That is still the base case expectation, but charts do not lie, okay? Charts do not lie. And there is always a chance that what we actually have is this inverse head and shoulders, okay? A week 24 cycle low that is also going to mark the 3-year cycle low. Just because this is the base case expectation does not mean that the 3-year cycle low couldn't form here and we couldn't do something like this, okay? We're going to get our answer very soon, because either that breakout that I showed you on my chart, either this confirms, right? Either this confirms, we move up and we start a new uptrend and we say, well, that's really obvious. By the time we're here, we're going to know, okay? By the time we're here, we're going to know. But if that happens, then all bets are off, okay? We're probably not doing this. We're also probably going to be under real pressure for the precious metals markets. We're going to be under real stress for the Bitcoin and the crypto markets, right? How is the dollar going to get a breakout, and we're still going to expect Bitcoin to move up, okay? So, like I said, is an extra layer of complexity here. Everything becomes quite simple if we see a lower CPI print and a dollar rollover like this, okay? Everything becomes super simple here because we just say, well, the hypothesis, the primary hypothesis, the base case expectation of this channel is this, and that is not yet invalidated. We will see the stock market come swinging out of here. We'll see Bitcoin go bananas, and happy days, right? But again, we are right in that timing window for a week 24 cycle low for the DXY, and that could easily become the 3-year cycle low on attempt 2 rather than on attempt 3 lower down, okay? So I hope this is what we get. I hope we get this rejection at resistance. I hope we get that lower CPI print, and I hope we can have some time and some space to blow off, have the all-time highs printed, for Bitcoin to go bananas, and then, like I said, we find that 3-year cycle low at the end of Q1. But charts are charts. Charts are the truth, and the truth must be respected. If this thing continues to break out, if this breakout becomes validated, and if we continue to see the dollar move higher, then we are going to have to change stance, and we're going to have to be prepared to change stance rapidly. Now, again, to be really clear, if this yellow squiggle plays out, right, happy days. We are in easy mode. Practically anything you buy is going to go up. Everyone's going to think they're a genius. Roaring bull market. You're going to hear all these soft landing narratives proliferate. You're going to hear a bunch of people tell you that they've cracked the code. You're going to see screenshots of profit on Twitter. It's going to be quite a toxic, nasty place to be frank, right? To be frank, people with less than 12 months market experience are going to be telling you they're the next Warren Buffett. It's going to be pretty nasty. I've been through this a bunch of times before, and I end up banging my head on the wall over and over again because I know that there's only one path for these people, right? They're going to pay. The market is going to humble them. They're going to have to pay their tuition, just like I've paid mine. So one last time, okay? Inflation, the single most important thing, because we're expecting that final leg down. That final leg down should confirm that we are indeed going to get cuts in March. The confirmation of cuts in March should indeed tell us that we are going to have markets move into berserk mode with this blow off top moment, okay? And all of this should hopefully confirm that we get a failed weekly cycle out of the dollar, followed by this rollover down towards the 3-year cycle low. And of course, whilst the dollar is hemorrhaging down into the mid 90s, we should also find the stock market and risk and crypto go absolutely bananas. But of course, the closer to bananas we get, the more vertical we start to move, then the more Camel starts to become the biggest bear on this platform. So it's been wild. It's been wild proposing this. It's been wild watching this thing play out in real time, following it day in, day out, having it tested a bunch of times, having to wiggle the goalposts and move them around slightly and adapt to the market as it prints new chart patterns and new truths. But here we are, okay? Here we are, hopefully in the final stages. I don't want a deflationary bust, believe me. Okay, everyone you know is going to get wrecked, absolutely wrecked. People are going to lose their houses. It's going to be worse than 2008 if I am right about a global deflationary bust. I hope I'm wrong. I hope what we get is a much more reasonable uptrend. I hope what we get, even if we do get a blow off top, is that it resolves somewhere here and then bases and then goes again. I do not want a global deflationary bust. I do not want a left translated cycle top. But the reality is we've been right up until this point, and we may well just be a few months away if I continue to be right, okay? So all eyes on the prize, and that prize, of course, is a lower CPI print. Let's see if we can get it. Let's see if we can put in this portion of the decline for the DXY. Let's see if we can find a cycle low here rather than here, because this will be pretty rough to deal with, to be completely honest with you. As ever, we take it one day at a time. We remain optimistic. Bitcoin is still doing Bitcoin things, isn't it? Okay, still hanging around here, still making higher highs and higher lows. Okay, that's just the facts. We still haven't invalidated this daily and weekly cycle. I see a lot of people talking about how this is Wyckoff distribution, and in my mind, one, I think it's too small. I mean, small ones do occur, but in my mind, that is just people fitting a narrative to their own bias. Okay, I see, and we've had a bunch of these. Okay, here's one, for example, a 60-day consolidation cycle. There's also one here, right? A 60-day consolidation cycle. To me, this is just another 60-day consolidation cycle. Tells us perhaps to be open to seeing something like this, just sideways, 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 and then go. However, I think if we do get that ETF approved this week, then that yellow squiggle of mine will likely end up playing. So one day at a time, long and strong, and I can't possibly be bearish until we print a failed cycle where we take out the low from back here. Gold, let's see, right? It's in that timing window to find a cycle low. So can it find one or not? That is to be determined. Still pushing this oil short and starting to look a little bit like maybe it wants to find a bottom here. Maybe it wants to reverse and stop me out, but the stop is choked up and we'll keep pushing that. The S&P 500, as I said, has printed a failed cycle, but I am aware that there's also an alternate count where if we were to do something like this, right, if we were to come in here and then rock it out of here higher on a CPI print, I might have to actually say that that indeed is the cycle low, and it would be late. It would be really quite late and quite stretched. But given that we had a cycle inversion here, then maybe that's the case, right? So flexible and open as always. For now, though, I stand on this count and we are expecting to see a rollover. Perhaps the chart is hinting at seeing a hot CPI print because of this. Like I said, if we were to come rocketing out of here, then I think it will become quite obvious. I'll be able to add somewhere here and move the stop up, and we'll recount and move the count. So we'll see how it goes, okay? One day at a time. Lots of mixed messages, lots of difficult reads at the moment. Markets aren't always really easy to read, and this is just one of those times. So that's absolutely fine, though. We will get through it this week after we've seen that CPI print. The Nasdaq doesn't look too bad, right? If it can start to turn around here, happy days. Otherwise, we're probably going to see a deeper pullback at some point. And the Dow Jones, that I've choked the stop up, but it's still not really done anything of significance yet, has it? It's still kind of holding up, and it still speaks to perhaps consolidation before a move higher, still holding above its low from back here that corresponds to the cycle low for the S&P. So long and strong continue to push. Let's see if we get shaken out. Let's see what happens with CPI. Interesting to me that the VIX Crush Friday shows up every Friday without fail, and the VIX gets sold off into oblivion. No different this time around. Are we going to continue to see the VIX come down? I would think so. Maybe a little bit more chop around CPI, and I think we then can start our move down as we complete that blow off top move. And the Russell 2K is hanging in there, isn't it? Hanging in there. So we'll see, right? We'll keep pushing this until it becomes unreasonable to continue to push it. For now, I remain long and strong. And lastly, the crypto-related equities, right? Look, still kind of holding support, still not really giving us much of an opportunity to add. I think if we can build a bigger structure, something like this, perhaps, and then draw a trend line and buy the break, I'll be happy to add and move stops up. But for now, I'm just not super confident about adding here. I'd rather continue to push the existing long. It's the same deal with MicroStrategy, right? Still holding above support, still not giving us too much opportunity to get in at the moment. If we can build a bigger structure, perhaps, then again, we can add and move stops up. For now, though, just want to wait for the market to give me a decent entry. I favor the high probability setup rather than the price at which to get into. I like what I'm seeing out of Riot, okay? Riot, long and strong continue to push, and if we can get a break above here, right, I'll be more than happy to add here and move the stop up. That seems like it would be a pretty nice setup. It would look something like this, right? So we'll add a second position in here, something like this, and then see what we can do. But for now, again, I want to continue to play patient. Marathon, again, it's still holding this support, isn't it? Look, it's not fully broken down yet, so build some kind of bigger structure in here, and then we could draw a trend line maybe by the break. Happy days, long and strong continue to push, but for now, like I said, there's not a great deal of opportunity to get in, so just want to continue to push these trades, So must be quite a long one because my voice is kind of tired, but super, super important week. We may be, by halfway through this week, we may well be at that point where we've had the ETF approved and we've got 60k Bitcoin. We also may well have a 25k Bitcoin if the thing is rejected. And for risk, for everything else, we may well be on a 2 handle for CPI and markets may be in absolutely berserk mode. Or we may have a 3 point something for CPI and, bigger sell-off, more pain in January, perhaps having to completely scratch off, blow off top, melt up thesis, right? This chart from back here, maybe we have to entirely cross this one out and come up with a new base case hypothesis. So it's going to be a massive, massive week. Base cases and hypotheses are being tested across the board, but we're going to get an answer in just a few days. And then from there, as always, we will continue to take this thing one day at a time and stay on the right side of the trade without bias. I'm about to record a members video, so members, look out for that. But everyone else, I hope you have a great weekend. Take care from me. All the best. Cheers. Bye.